This is Dan Dix here reporting for Press for Truth. I'm glad to have you joining with us today because we have a very important topic to talk about. Today we're going to be talking about the importance of putting your assets into tangible, physical assets, protecting your assets with physical, tangible assets like gold and silver, especially in the face of this coming inevitable dollar crash. And I think one of the best ways to do this is with things like gold and silver. I know there's a lot of hype in the crypto space right now, and indeed there's a lot of money to be made there. But as we've always said, you know, it's really important to actually own physical assets like gold and silver, especially in the looming face of this dollar crash. So joining us on the line to talk about some of these investment opportunities that we're going to see in 2018 is our good friend Lior Gantz of Wealth Research Group, wealthresearchgroup.com. Lior, thanks for joining us today, man. I want to get some of your picks for 2018, some of the things that you see as a wise investment moving forward, especially in the face of a looming dollar crash. But before we even get into that, maybe you can break down for us a little bit about why people might want to think about the need to do this in the first place. I mean, maybe you could start us off talking about the current state of inflation, or maybe we could call it deflation. It seems over the last 9 years it's been relatively low, which makes me think there's going to be a subsequent spike coming soon. So what do you think people can expect in terms of inflation coming in 2018?
Well, Dan, I think in general, and first of all, it's very important to understand that you always need to own gold and silver. Gold and silver are an insurance policy for chaos situations. So, you know, think of your own life. Do you own insurance when the economy is good and the economy is bad? Of course you do, right? You own your car insurance, your home insurance. Some people own life insurance, etc. Some people insure their washing and dryer machines. So insurance is an integral part of life, and every person should own a certain amount of insurance in his life that is individual to how much he believes in the economy and how much he feels that would give him security, and of course how much he believes in the ability of other governments to meet their demands, etc., and how much gold should be worth as part of his life. So for me, it's always been between 5 to 7%. If my other assets, stocks, real estate, etc., go above in price, and then gold becomes part of the portfolio in a way that is 3 or 4%, I add to my position. If it's if it gets to 10%, I would consider selling some of my positions in physical gold and silver. But usually it's about 5 to 7%. Most people don't own gold. Right now, as a global asset, it's owned by 0.85 of the population, so not even 1% of the population globally. And you're talking about countries that have a lot of gold culture, like Switzerland or China and India. But even with that, gold ownership is extremely low. Silver ownership is even lower. And so people have become accustomed to owning mostly, in terms of savings, their national notes.
It seems some people are wising up to it. I don't know if you've noticed a bit of a spike recently. Gold's gone up, I think, $60 in the last month or so. This is the most it's gone up in, I think, 6 or 7 years. What's going on?
Sure. Well, a couple of things are going on, but just to wrap up the previous note, when you own gold and silver, your holding period should be until you die, because they are insurance. You don't buy them and then sell them, buy them and sell them, just like you don't buy an insurance policy and then look for someone who wants to buy it off your hands. And so if you're looking to become by way of chaos investing, that is not the best way to do it, because you're gonna always have to sell half of it or a third of it and come back, etc., and buy it. It's just not a good way when you own the physical precious metals. Some people own paper gold like GLD or ETFs or other funds or gold stocks, and those are ways that you can trade in and out with leverage and they're built for trading, for growth, for capital appreciation. Now, going back to your to your next question, you've got geopolitical events that are happening, which always create a demand for alternative currencies that are not political currencies, right? All currencies are now political. So if a country is unstable, their currency seems less stable, then you would buy an alternative currency like gold. You would buy money. And so you've got that playing in the background, North Korea, Iran, and whatever we don't even know that will happen in 2018. We don't live in times that are that quiet, that the need for gold is lower as a society. It's pretty substantial. You've got the wealth gap in the United States, which is and in Europe, which is very, very socially unstable. For example, if you take a 1,000 people cut from the United States, and you ask who's the richest of that 1,000, that person is richer now than the combined bottom 900 people in that group. It resembles Mexico in terms of their wealth disparity, not a country which is developed like the United States. It shouldn't have that sort of a big disparity in wealth, and that causes throughout history populism or populist uprisings, things that can really hamper an economy and how stable a society is. And Dan, what's important about this is that the United States has reached a situation where it's almost impossible for them to have a recession. If they have a recession, the amount of frustration that is right now dormant and under the surface will creep up and will cause a lot of problems. And therefore, people are hedging this with gold.
Yeah.
For example, Ray Dalio, who has studied the subject of populism, he's the world's largest hedge fund manager as part of Bridgewater Associates. He's piled into gold in Q1 and Q2 and Q3 of 2017, now the sixth largest holder of GLD. And so you see a person who is that sophisticated going in and saying, hey, the need for gold is there, definitely there. And you got to figure that fund earns about 21% a year for about 27 years straight now, on average. So he's banking on a price for gold that is 20% higher than today.
Right.
He's looking at a fair market value of at least 1560. So that's important to take into account. The other thing is inflationary expectations, which are always favorable to gold. People think that rate hikes are detrimental to gold, and that's that's not true. You can look at the 70s for an example, where the Federal Reserve had to raise rates to 20% in order to end the need for gold ownership. So gold ownership becomes more important when real interest rates are negative, and real interest rates are the inflation rate and the treasury yield playing against each other. So the 5-year treasury yield is about 2.2% right now, yielding. Inflation officially is about 1.5, but unofficially it's closer to 3. And so you see a real interest rates which is negative. So your cash is losing purchasing power every day.
Yeah.
So if you think that the expectation of this is to increase, then as an investor you're saying, okay, why wait? Let me buy gold now and make sure that I don't lose more of my purchasing power. And when you let's talk about raising rates, okay? So when you tighten interest rates, Dan, what you're signaling to the market is, if you want to take out a mortgage, now is a better time, because in 1 year you're going to pay more interest rate.
Right.
So raising rates is like telling people, do you want to buy now at a discount, or do you want to pay full price later? Whereas when you lower interest rates, you tell people, hey, do you want to pay full price now, or do you want to wait and pay a discounted price later?
Yeah.
So it doesn't stimulate an economy, and what it does is it stimulates some portions of the economy, because it allows for cheap credit. And so whoever is enjoying it is whoever is already rich and has access to discredit. And that's why you saw that during the Obama administration, whoever got rich is whoever was rich before.
Mm-hmm.
So the rich have gotten richer and the poor have gotten poorer during the last 7 years of monetary policy.
Right.
And that has caused this huge wealth gap
Mm-hmm.
in developed nations. Going forward in 2017, a lot of inflationary expectations, and therefore the price of gold should have a great year. And what's very interesting is that we're about 80 weeks into this gold spot bull market since December 15th, 2015 when it bottomed. So it's been 2 years now. And usually around that period, around that 80 to 100 week period, gold shares join the gold spot price and become favorable positions to hold.
Mm-hmm.
Where people see that, hey, this gold bull market is not going away. It's 2 years into it. I want to start making more money, and I want to go into quality gold companies or copper companies.
Yeah.
Because copper moves first.
Well, one that is going away, I think, is the bond market. I mean, we're obviously in a bubble in that regard. And what can you say about the topping right now of the stock market? I mean, it seems to me we're in the final innings of the U.S. equities bull market. So it's really important right now for people to hedge their gains and to try to look for a safer assets here. So what are some of the companies that are screaming out to you as some of the more safe kind of wise areas to invest in that sector?
Okay, so I've been investing since the age of 16. I got working when I was 13 when my father went bankrupt for the first time, and I just started babysitting, coaching basketball, working at clothing stores, and paying decks. What didn't I do, right? So by the time I was 16, I had some savings, and I got my parents to sign a waiver with my bank, and I started actually managing my portfolio when I was 16. So I've been investing for 18 years straight, and for most of my portfolio, it has always been dividend raising stocks that have been the bulk of my portfolio. So companies that can raise their dividends year in and year out, no matter what the economy is doing, no matter what interest rates is doing, are superior companies. Just think of businesses, Dan, in your life that are able to every year pay more and more back to the owners of the business. That's very irregular for a business to be that good. And so these are world-class businesses, and they always make the major part of my portfolio. Now, I always buy them when they're when they're undervalued or inexpensive, and right now most of them are expensive. And so with that part of my portfolio, I haven't been making a lot of purchases for at least 2 years now. If you go to Wealth Research Group, the website, and you go to the top menu, you'll see one tab on the left that says Wealth Stocks, and you can click on that to see some of the companies that we feature. All of them are above their buy-up price right now, and so that part of my portfolio is stagnant when it comes to trading. I own these companies. When they pay their quarterly dividends, I reinvest it in more shares and basically buy more and more all the time using the dividends. So you use the free money that you get from them and you buy more of them and accumulate them over decades to create your core legacy portfolio that can be worth millions and millions of dollars by the time that you're 50 or 60 if you start young. Mm-hmm. So that's the conservative part of the portfolio. If you're asking me for the type of company that is in there, for example, the first company that I ever bought, the first stock that I ever bought in 2002, I still own it today. It's called VF Corp. If you look at them, and obviously the company is fairly valued. I don't think it's a good time to make a new purchase. But if you Google VF Corp, you'll see that they are a manufacturing of retail clothing. They're the owners of North Face and Timberland and Kipling and Wrangler and Lee and many of the brands that you know and wear, but you didn't know that they were all under the same umbrella. So when I was 18, that is something that I knew a lot about, clothing, obviously as a teenager, and I made a purchase into that company. When I bought it, it was yielding 6 cents per share dividend. Today, it's yielding 42 cents. So, in other words, think about it as a house that was yielding $600 in rents per month when you bought it in 2002, and now it's paying you $4,200 per month the same house.
Yeah.
So
not too shabby.
When you can find companies that are able to always grow, no matter what's going on in the economy, that's something that's valuable, and that's how Warren Buffett has made the lion's share of his wealth, by buying these types of companies that have a rising dividend year in and year out consecutive.
Yeah.
And so, okay, so put that aside for a second. That is the core part of the portfolio, because those companies are very safe to build your wealth on. Then you want wealth outside of the stock market. So you would want either to be a private lender using online platforms for private lending, or you would want to own residential real estate, or you would want to have wealth that is not connected to the stock market. That's another layer of your portfolio. And then for 2018, 3 themes that are much more speculative but can create enormous gains. And in 2017, you and I both know, and we discussed this off the air, Wealth Research Group was one of the first newsletters to cover at $12. It's over $850 right now. Huge gains, 70 times your money. Dash at $30, it's over 1,000, 30 times your money. Monero, we covered it so early, it's over $350 right now. If I'm not mistaken, we planted that flag at about $19. Ripple, 3 weeks ago, at 27 cents, it's over $3. That's a 1,100% move. All of these cryptocurrencies are like startup companies. You should view them as you viewed the Nasdaq bubble. Most of them are useless and will go away, but some of them solve a real problem for many people, and they will be there in 2 and 3 and 4 years, because like in the Nasdaq bubble days, the internet's still around. It's not like the crash wiped away the internet, or some of the good companies that are $100 billion worth, 200, $300 billion worth companies, like Cisco, Intel, Qualcomm, Oracle, Microsoft, etc. They're dominating their industries. And so you're going to see projects that are out there right now that will be there in 2 and 3 and 5 and 10 years if they continue to be relevant. These are businesses, whether or not they're decentralized and open source, or have a governance system, or are more centralized. They solve a solution, and therefore, by definition, they're a business. They're a new type of business where you actually, by owning a token, you own part of the business, right? So if the business is more valuable, if it has less risk in it, if it's de-risked by the fact that institutions find it valuable, which gives it a lot of legitimacy, then you're going to see some cryptocurrencies gain a lot. So in 2018, we're going to cover 5 new altcoins. In fact, pertaining when this interview is going to be aired on the 5th of January 2018, we're going to release our 5 top altcoins for 2018. You can go to wealthresearchgroup.com/top5, top and number 5, starting January 5th, and download our top 5 for 2018. I can tell you none of them are currently in the top 10. So we're talking about the 5 top altcoins that are not the established coins in the marketplace right now. The second thing is cannabis. Cannabis just legalized in California. No turning back. That clock. It's over and done with. More states will come in and legalize. Canada, as you know, is legalizing on the 1st of July. The trend is obviously more tax revenue, more job creation, less imprisonment, and less policing of cannabis, and more R&D into medicinal cannabis. And so it's a beautiful thing to see. I'm glad that it's happening in North America and throughout the world. and it's a grown-up world. People should think about what they're doing with their own bodies and do their own research with that regard. The last thing that is going to be huge in 2018 is inflationary expectations, and I expect commodities to do exceptionally well. In fact, copper is up about 15 straight days. Gold is making it's breaking out above 1300 again, and I think it has room to go up to around the 1350s, which was the 52-week high back in 2016, 2017. Other commodities that are important are those that have to do with strategic uses for the new economy, like cobalt, nickel, lithium. I think all commodities will enjoy an amazing 2018 because 2017 confirmed that the U.S. dollar is in a new bear market after being in a bull market from compared to other currencies from 2011 to 2017, gaining 35% on on the index compared to other fiat currencies. It had its worst year since 2011 and 2017, and the downtrend trajectory is in place technically and fundamentally. You're going to see an important time for commodities. Now, the other thing that's important for commodities that wasn't there before is growth. China is in a new growth spree. They said yes to credit. They're going to grow their economy. They're going to grow their 300 million strong middle class. Their middle class is going to start acquiring real estate, modern real estate that needs copper wiring, that needs aluminum, that needs construction. They're going to build mega cities for 50 million people, and they're going to connect them with roads and railways and transportation and airports, etc. All of these things are going to consume a lot of raw materials. An exceptional time to be a bull in commodities, and just a generally great time to allocate part of your portfolio into real assets, commodities, because they're very, very cheap.
Mm-hmm. Well, this is what I'm really interested in right now, and particularly in this interview is some of these ones. And I've been watching what you were doing, and I'm curious. Who is Wheaton Precious Metals? Because I've seen that come up, and what can you tell us about them?
Okay, so Wheaton Precious Metals is a company that was formerly known as Silver Wheaton. To those who have been around the mining sector, Wheaton Precious Metals is a company that is known to tycoon billionaire mining moguls as the best business model in the world. The company is a $12 billion behemoth. It's always priced at a premium, so as an opportunity, it's very hard to find a time to really buy it because investors appreciate it. Many gold funds own it. Even some pension fund own this mining company. So it's a very stable mining company, paying a dividend. The Swiss Central Bank disclosed ownership of this company, and why I bring it up and why you brought it up is because about 2 weeks ago, a tiny small cap copper zinc company, which has in its historical resources in its project a way to facilitate a streaming deal with precious metals. With Wheaton Precious Metals on when it comes to their silver and gold. So when you have a project, Dan, that has large quantities of copper and zinc, inside of that there can be ore of gold and silver that is insignificant. And so a company like Wheaton Precious Metals will come in and say, hey, you've got a great project. If they come in and say, you've got a great project, we want to help you get that project underway and get that mine operating. You mine the copper and the zinc and just give us the silver and the gold in a streaming deal. A streaming deal means that they get a fixed price to buy that gold and silver, which the company did want anyways, and they can turn around and sell it to the open market because that fixed price is going to be lower than the market price. And so Wheaton Precious Metals is a company that does only like 3 deals every 18 months, and they just announced a huge deal with Cucho Copper, and And Kucha Copper is a newly listed company, so it's completely under the radar. And we did thorough research on it for like months. You can go. I've done a special report on it for listeners of your show at wealthresearchgroup.com/inflation. We started covering this company 2 days ago at 64 cents Canadian. It's already up to 93 cents Canadian today. So 2 days later, as we're doing this interview, because the market is taking notice that a company like Wheaton Precious Metals that is run by Randy Smallwood, which is a legend in the mining sector, if they take a position in a company that is brand new, that's like saying, that's like Warren Buffett taking a position in a small company and saying that is something that can have huge potential. Because the Wheaton Precious Metal goes in and does like a 3 or 4 month due diligence period. They turn every rock. Like I said, 3 deals in 18 months. That's like 1 deal every 6 months. Think about people who only buy one stock every 6 months. That's very rare. And talking about that, Wheaton Precious Metals also took an equity position in this company. So usually they fund them. They give them a loan and help them speed things up. Now they told them, look, we also want some of the equity. We also want stock. So they took about $5 million worth of stock from the company as well. So you're talking about a strategic partner in Kucha Copper. And that's why don't you, Kucha Copper is KUTCHO Copper, just for people who have a hard time understanding the spelling of this company.
Yeah, we'll definitely. Yeah, we'll have links in the description to your outline on that particular company, because that one sounds exciting to me. Like if you're interested in these commodities, I mean, that seems like the way to go. I mean, copper, zinc, it's the future is leading in that way, and if we can get in on the ground floor now, that's fantastic. Now another one that we've talked about a few times is of course Hive blockchain, but one thing we haven't really touched on a lot, and given the title of this video, Hive blockchain is connected to Fior Gold Group, and that is something that is really interesting to me in terms of physical tangible assets and a company that's worth looking at. What can you tell us about them and their projections for 2018?
Well, so if we go back to 2017, Dan, what happened in Q4 was that a lot of the exchanges for cryptocurrencies were backlogged or had a long verification process. People couldn't buy cryptocurrencies for like 2 days, just doing a verification process on some of these exchanges. The servers went down. They had a lot of malfunctions because they're overloaded. And even when you got a chance to buy some of these cryptocurrencies, you can buy them only for $300 or $400 or $500, etc. And so many subscribers emailed us and said, "Look, we're looking we're looking for ways to deploy tens of thousands of dollars into the blockchain sector." And so we looked at publicly traded companies that don't have a liquidity problem, and we found at day one Hive Blockchain Tech, like you said, and Hive Blockchain Tech has gone up about 900% bottom to top in three months in 2017 since it launched, and I believe it's going to be the go-to company for all blockchain institutional investors going forward. It's going to be $1 billion company for sure, and a multi-billion dollar company the way I see it. They just have the right people behind them, and the right people is this Fiore Group, which is a serially successful conglomerate of entrepreneurs. And right now, what they're doing is they're allocating their efforts and energy also into the gold sector. So in Nevada, they've got a company called Fiore Gold, and Fiore Gold is going to create a plan. They already created a plan. They're going to execute their plan to consolidate in Nevada 6 or 7 or 8 other producing miners that are mismanaging their mine in some way. So something is not working for them, and Fiore Group is going to want to bring their talent to the table, like they did with the launch of Hive, and create a situation where they have a company that operates on 150,000 ounces a year of production. Currently, the company produces about 37,000 ounces a year, so they're looking to make a 5-fold increase to their production. In terms of market cap, they're trading at about 80 or 90 million Canadian, and Nevada quality companies that operate at a rate of 150,000 ounces a year are trading for about $1 billion. So you've got an enormous upside potential with this company. And I just got off the phone like literally 3 hours ago with one of the partners in Fury Gold. In my opinion, the best negotiator in the business, bar none, Brian Fresparga. And a day before, I spoke with Tim Warman, the CEO of the company. These are just very talented people. For example, the way they acquired their first mine, the Pan mine, the one that's already operating at 37,000 ounces a year, is they found a project that had $200 million, Dan, $200 million spent on it, estimated, and they bought it for about a 75% discount.
How?
So these people are excellent negotiators, get access to to see deals that other groups do not see, because they get their funding is lined up. I mean, when they talk to you, you know that they got the cash to close deals. And when they acquire other companies are happy to take on shares of the new company because they know that these people will advance and win for their shareholders. And so that's something that's very exciting. Yeah. If you want the full analysis on that, I created like a lengthy report on the company and everything that they're doing at wealthresearchgroup.com/gold 2018. For Q1 and Q2, that's definitely a company that you want to check out, because this is the time right now when there's a bloodbath, like a massacre for these gold companies for 7 years. And you can scoop up for probably the last time during this decade companies on the cheap before the gold sector becomes much more favorable. Figure this. Half of the companies in the world are sitting on uneconomical projects at these levels, at 1,300. Mm-hmm. When gold goes up to about 14 to 1450, companies get repriced because now their projects are going into production. And so if you can consolidate right now on the cheap, great assets, when the market gets repriced, these companies are the ones that go up 5 and 6 and 7 times your original principal. And so that's very exciting to us as well.
Awesome.
So both of these companies are top suggestions or top stocks to consider and research for yourself in Q1 of 2018. Kucha Copper, going back to that for a second, if you can understand that what they're looking to do in 2018, part of their milestones, and what the CEO Vince Soros is doing, is he's going to drill into the historical known resources. When you do that, you have a very high likelihood of a low risk, high reward strategy that can grow your resource base by 80 to 100%. Think about that, Dan. Your existing resource, you already have resources in the ground. You know that they're there. Yeah. You're just going to do a simple drilling program, a modern drilling program, because you haven't drilled in like 30 years on that project or something of that nature. And then, boom, you just announce to the market, hey, we got double the minerals that we thought we had. These types of companies, if you go back historically and they announce 80 to 100% resource-based move in 1 year, those companies go ballistic, because those are very de-risked companies. And so that's something that to take into consideration. And obviously, I'm very biased because I'm a shareholder in both companies in a massive way.
Yeah, well, I can see why, and I really encourage people to check these links in the description. I'm going to be checking them out myself. There's a couple new companies you mentioned today I hadn't heard about yet, so I'm really excited to check out these new picks you've got for 2018. Once again, Lior, thanks so much for joining us, man.